The idea that the wealthiest and the most privileged of the world have access to information that we don't is nothing new. For hundreds of years, people have wondered about secret societies, men's clubs, or grand conspiracies, and while the idea of the Freemasons secretly controlling everything that happens isn't exactly mainstream today, few people would argue against the billionaires of the world having more information than the average Joe. Even fewer would argue that the most successful people in the world, those who built their billion-dollar fortunes themselves, are going to be less intelligent than you or I. Perhaps that's sufficient justification then for us to pay attention to what they do. And while I personally don't subscribe to any grand notions of the Illuminati or a worldwide elite with knowledge of exactly what is going to happen, I do think that if Elon Musk, Jeff Bezos and Richard Branson start selling their stocks, there's probably a reason why. Well, funnily enough, that's exactly what seems to be happening right now. Some of the smartest, most successful people alive today are liquidating their positions, selling out of their stocks and preparing for something, and that's what we're going to be looking at today. But first, make sure to leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio.
We have the stock market at absolute all-time highs.
Ripping.
We have crypto at absolute all-time highs.
Ripping.
We have the art markets. I don't know if you guys saw Phillips and Christie's and Sotheby's this past week. At absolute all-time highs.
Sold another Beeple for $25 million.
We have inflation at a 30-year high. We have 10-year break-evens at a 25-year high. We have, 1 trillion that we just approved last week, and we're still horse trading on another $1.8 trillion of stimulus that we're going to put in. And so then you have, I think the most important thing, which is the two most important founders of our generation, the two smartest people who have really consistently won, Elon Musk and Jeff Bezos, have collectively sold more than $11 billion of their holdings this year alone. And if you can't take all of that and decide for yourself what's right for you and your family, you're doing yourself a disservice. I think it's important for me to never sort of be forced to tell folks whether I'm buying or selling, although I'm willing to do it in moments where I think it's important. But I think it's really important to understand the context. And so I think these folks that think derisively about individuals who are managing risk, I think it's really naive. And I think it creates a lot of missed opportunity for them as well. If the smartest people in the world are now selling their core holdings that they told you they would never sell, and you are not reconsidering your position on things, you're either much smarter than them, or you're being really, really reckless.
So, funnily enough, that right there was Chamath Palihapitiya, a billionaire investor who has profited a huge amount off of the back of this most recent bull run. He's taken companies public, mostly via SPACs, before exiting his positions with pretty hefty profits. Usually, investors like to listen to him to get a new perspective on the markets, to see what he's thinking, and to try and work out what's actually going to happen. But here, we see Chamath taking inspiration from others, and that's part of the reason he's selling out of his positions today. Stocks are higher than they've ever been. Crypto is at all-time highs, sitting at over $2 trillion market cap. The housing market is also at all-time highs. Alternative investments like Rolex watches and classic cars, things that really have no business rising in price the way they have, are at all-time highs. Inflation is sky high as well, sitting at the highest it's been in over 3 decades. Huge amounts of money printing and demand stimulation has happened over the last 2 years, and yet it's not actually stopping. Yes, tapering is supposed to start soon, and yes, at some point in the future, the Fed is planning to hike interest rates, but in all reality, the impact of this is minuscule compared to what has already happened. By all accounts, all the markets and all investments seem to be performing very well. So why are Jeff Bezos and Elon Musk selling, and what's Chamath doing as well? Well, those of you who read a little bit about him probably know that he sold out of his Tesla position over the last year at a time where the stock was worth between $600 and $800. He had been one of the earliest institutional investors in Tesla and was one of its biggest bulls as well, second only probably to Cathie Wood. His investment increased 20-fold over just a few years, quite literally making Chamath a billionaire. When he first got into the stock, it was a risky bet. The company was on the brink of bankruptcy, it was years away from any kind of profitability, and was forced to raise huge amounts of capital just to stay solvent. So why would Chamath want to leave this investment that has treated him so well, especially after it finally became safe and reliable, almost even a blue chip stock? Well, he'd never say it, but it's almost certainly the case that Chamath just thinks the party is ending, that the music is stopping, and that these sky-high asset prices are not going to stick around. Now, some people will find it funny that since Chamath sold out of his position, Tesla has ridden up another 25%, so surely he's been proven wrong, right? Well, the reality is that this play and Chamath's investments in general are always long-term bids, and a few months is not nearly enough to measure someone's successes and failures. If in 3, 4 or 5 years' time, Tesla has continued to soar to the moon and asset prices have continued to skyrocket, then it would probably be fair to say that he was wrong. But we're not there yet, and deriding someone because they only made a 20 times return on the largest bet of their lifetime is probably a weird decision to make. Now, Chamath actually seems to be pretty consistent on this front. He's mentioned multiple times, both on his podcast and in various interviews, that he thinks we're nearing the end of this bull market. He is worried about inflation, the impact it's going to have on the equity market itself, but also how it's going to affect interest rates, the economy, and the US government. He actually outright said that we have 6 months to unwind our positions and that after that deadline, there will likely be nothing stopping a crash. What the trigger for that crash might be, no one really knows. Maybe it's a hawkish Fed raising interest rates far higher than anticipated. Maybe it's the collapse of Evergrande and the Chinese property market as a whole, or maybe it's a war in Ukraine or Taiwan. It's clear what Chamath thinks, but what about those who he's looking at and taking notes from? Well, the two people who he said are the biggest winners in the world, who have got everything right, who just might continue to get everything right, are Elon Musk and Jeff Bezos. Now, I think it's probably fair to start off with Elon himself, as he's probably the more high profile of the two. Now, just in case you've been living under a rock, I'll briefly explain what's been going on with Elon over the last few weeks. Back on September the 14th, Elon put forward plans to sell a large portion of his Tesla stock, though he kept it quiet and no one actually found out about this until a couple weeks ago. Then, on October the 31st, a couple weeks before he was due to exercise those plans and sell some stock, he put out this tweet, telling the UN that if they replied to his tweet with a plan on how to end world hunger, Elon would sell Tesla shares to give them the cash to do it. Unfortunately, no such reply was given, so Elon's offer went untaken. Then, a few days later, Elon tweeted this now infamous poll, making the point that a lot of people complain how he doesn't pay enough taxes, so he's considering selling Tesla shares purely to pay some capital gains tax. To some people's dismay and other people's delight, the people of Twitter voted yes to his proposal, and he announced he would abide by the poll and sell around $25 billion worth of Tesla stock. Since then, he has offloaded around 8 million shares for around $8 billion and is likely going to keep going. His brother, who was an early stage investor in the company, also sold a significant portion of his holdings just a couple days before Elon tweeted out this poll. He's also continued to tweet out at people like Bernie Sanders, seemingly asking him to request that he sell more stock. Now, I want to be perfectly clear here. No one knows what's going on inside Elon's head except Elon himself. This could literally be Elon having some fun selling some shares to cover his tax obligations while also mocking some pretty big names on Twitter just to amuse himself. It could, however, also be a ploy to try and sell out of some of his Tesla holdings without appearing as though he has lost conviction in the company. It does appear as though this sale was premeditated and that the poll and maybe even the other tweets were attempts to create reasons to sell his shares to save face. The fact that his brother also sold a large portion of his Tesla shares right before this poll went out and before Tesla's share price started to fall as a result makes it seem like this maybe was planned. Michael Burry of Big Short fame, who has made a name for himself as a Tesla bear, certainly thinks this is the case. Tesla's share price is sitting at pretty crazy all-time highs, and it's not unreasonable to think that maybe Elon wants to cash in on it while it makes sense to. Elon is even on record as saying that Tesla was overvalued back when it was worth $160 a share, and it's now 8 times higher than that. Rivian, another electric vehicle manufacturer, seems to be in peak bubble right now as it's valued at over $120 billion, despite the fact that it's not even a real business, it's basically just a plan for a business. Chamath himself said that Elon is one of the biggest winners in the world, one of the smartest people around, and the fact that he's selling Tesla is not up for debate. What is contested is the reasons behind that. Is Elon just playing around with Twitter and making a point about capital gains taxes, or is he actually trying to cash in? Now, if you're like me, you care about personal finance and you try to be smart with your money, then you need to hear about this video's sponsor, BLOCKFI. Now, BLOCKFI offer a crypto earn platform that allows you to earn interest on whatever crypto you hold, including stablecoins. Personally, I like to keep around $15,000 in cash that I can access quickly at any point just in case. Now, I don't want to put that money in stocks in case I need it during a market downturn, so what I do instead is I hold that $15,000 worth of stablecoins on a BLOCKFI earn account, earning me 9% interest a year. I can still access the money anytime I like. I don't have to worry about market fluctuations, but I also don't have to put up with a measly 0.5% interest a year that I'd get with a savings account. For anyone interested in BLOCKFI, there's a link down below in the description. If you have an emergency fund that isn't making you money, then I highly suggest you check them out. You can also get up to $250 in free Bitcoin when you sign up using the link down below in the description. So if that's the situation in Tesla land, well then what's going on in the Amazon? Well, it's a strangely similar story except with less drama and far fewer tweets. Last Friday, Bezos sold $1.3 billion worth of Amazon stock, in addition to $2 billion that he sold earlier in the week. Over the last year, he sold just under $10 billion worth of stock. Throughout 2020 as well, Bezos was selling out of his position, dropping another $10 billion worth of Amazon. Previously, he announced that these sales were to fund Blue Origin, his aerospace company, or to fund various other philanthropic ventures. But right now, there doesn't really seem to be anything requiring immediate cash injections from him. This raises the question then, why is he selling shares of the company that he said he would never sell? Over 2020, the price of Amazon has surged 74% on account of its great growth, especially in the wake of the pandemic. Could Bezos, like Musk, be thinking that the stock is overvalued, or that maybe a market downturn is around the corner? If consumer sentiment continues to remain at decade-long lows, would we expect Amazon's sales and revenue to fall? If interest rates rise and people's bills continue to rise as well, would we expect people to spend more or less on Amazon products? What about businesses who utilize Amazon Web Services? These might seem like mundane, boring and pretty obvious questions, but there's a reason I'm asking them. Consumer sentiment has been dropping like a rock, and it's the lowest it's been since the Great Recession. Real wage growth over the last year has been negative 2%, meaning people essentially have less money in their pockets than they used to. Businesses that aren't listed on the Nasdaq are really struggling to keep up with supply-side shocks that are causing havoc all across the world. The idea that a market downturn is just around the corner isn't a crazy one, and it certainly shouldn't be swept under the rug. Once again, the truth is that I don't know what's going on inside Jeff's head any more than you do. But I do think it's odd that he's winding down his position in Amazon, the company that he's dedicated his life to, and it shouldn't go unnoticed. Finally, I thought it might be a little worthwhile to look at another billionaire, maybe just as eccentric as Elon Musk, but not quite as successful, and that is Richard Branson. His recent forte into the aerospace industry with Virgin Galactic, which just so happens to have one of the coolest ticker symbols around, SPCE, has been a wild ride. Now, on the surface, Virgin Galactic is a difficult investment. There are huge levels of risk with the company, there's a very narrow niche with which it aims to generate revenue and profit, and to say that the company is overvalued according to its revenues or profits is obvious because it practically has none. Nonetheless, when the company went public, it found itself valued in the billions. And to many people's surprise, Branson and actually Chamath as well have been trimming down their positions in the company by quite a large amount. We already know Chamath's view on this kind of company, and we already know that his intention is to exit the market over the next few months in preparation for a bear market. So the question once again has to be asked, is Branson doing the same thing? Is he also making the most out of a crazy bull market and selling while prices are high? The facts are that billionaires are cashing out of their positions. Of course, they want us to know that their conviction behind their companies are as high as they've ever been and they still think their stocks will thrive. But the question is, do we take them at their word or do we look at their actions? Stock prices and asset prices as a whole are at all-time highs and everyone aspires to buy low and sell high. Should we really hate on these people if that is what they're doing? Or should we just take note, look at the facts, try to work out the motivations behind their actions and make adjustments to our own portfolios as we see fit? Personally, I think that even if these stories amount to nothing, even if these billionaires aren't trying to time the market, this is still a story that I'll be glad to have covered. You can never know too much about what's going on. You can never hear from too many people and consume too much information. Even if you disagree with what that information is or what it means, knowing another point of view will only serve to make you a better investor in the long run. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. Also, you can get 9% interest on stablecoins like USD Coin, which is a far higher rate than you'll get from any savings account these days. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.